So, in today's podcast, we have a very special guest. We've been alluding to the finance space and trying to get someone on to talk about Bitcoin and why it's important. And we today have British HODL on the podcast, and we'd like to welcome you. We know
It's a
it's
pleasure.
you're in the
It's a
UK,
pleasure.
right?
I'm from the UK, but I don't
Oh,
live in
okay.
the UK. Yeah, but it's a pleasure. Thank you for having me on.
Absolutely. And we do have a lot of kind of DMs and emails about finance because, it's not only important to stay fit and, the idea of what fitness can do in your life, but also the idea of, making a living and what's important to you. And, British Hodl was someone I've been watching in the space for a long time because originally I saw this transition. Like originally he was this young guy, he got into finance and into real estate through his father. And over the course of time, it's sort of it's that old, story of, when we're younger, we're really self-centered and we're focused on money. But over the course of all of his, I don't know how many videos that he has on his channel, but over the course of time, he's transitioned to someone who's talking more about legacy and humanity and your space in the world. And I thought that he'd be the perfect person to come on, not only to give us an education of what Bitcoin is, but also this mindset shift of, this thing that every man goes through from, always thinking internally, always thinking self-centered to maybe how we're going to contribute to humanity, and also what's the legacy we're going to leave for our kids. Does that seem like kind of where
Yeah,
you've been like on your journey?
yeah. My journey is interesting because I started in business when I was like 15 and a half. So I've had the pure greed to the, okay, what's bigger than my greed, but still greed when you're building a business,
Mm-hmm.
to, okay, now that I'm okay, and now that I actually have worked enough to trust my own arrogance so that it turns into confidence, what's next after that? So yeah, my journey's been interesting, and I think right now the most important thing that I could do in my life is to help people understand what Bitcoin is and why it's important. That's why I'm doing what I'm doing.
Well, your journey was very personal because it started with watching your parents do all the right things, right? For the last 30, 35 years, they're doing all the right stuff. They're getting into real estate. They're setting up maybe this legacy or this financial security for you and your brother, right? But over the course of time, with the governments and how money's being printed, you started to see that maybe real estate wasn't the greatest thing as far as their efforts were it was kind of working against them, right?
Yeah, so my parents are both immigrants. I'm a proud Brit. I'm born and raised in the United Kingdom. Very proud of the UK. And my parents were also very proud of the UK as well because it gave them the opportunity uh, to build something and to actually keep something, which is quite important. And so they did what everyone else did at their time, which is work hard, build a business, get involved in real estate, and hopefully one day you have more than you need. And sacrifice, sacrifice, sacrifice. You know, the age old immigrant story of one house, 11 people, et cetera, et cetera. And, unfortunately in the UK, we have slightly smaller houses than you guys in the States. So this was like a tiny house,
Mm.
comparatively a small house. And then eventually they had me, and then they had my brother. And then fast forward, 30 to 40 years, and they're sitting in a situation where they've done the right thing, invested in real estate, followed the laws, been, law abiding citizens, et cetera, et cetera. And now they're faced with the reality that their property portfolio has not maintained the value that they had put into it because of the amount of debasement that's happened. And this is not a unique story. I'm not trying to say this is unique to me. Most people that have got involved in legacy assets have faced this. Whether you were investing in real estate or whether you were investing in the stock market, they've kept up with inflation, but they've not kept up with debasement. And debasement is the real enemy. The percentage of the money supply that you control is your wealth.
Mm.
Whether you can keep up with prices or not is irrelevant because my inflation rate is completely different to your inflation rates, right? I like smoking Cuban cigars. The inflation rate of Cuban cigars has been far beyond the inflation rate of, protein powder or whatever, right? Like it's just different. Everyone's inflation rate is personal and everyone's inflation rate is different. Therefore, inflation is the wrong metric. Debasement. How much has the amount of dollars that have been printed, how much has that expanded? And do you still own the same percentage of that you did 5 years ago today? That's it. It's the only thing that matters.
Well, the thing that it's sort of you have a very common story with what orange pilled you, but I wanted you said something very funny because you're like I fucked up, right? And you were walking through the park, you're listening to an audiobook. I'll let you tell the story, but you realized at that moment that you had a little bit of Bitcoin, but you already sold it, right? And you're like, oh man, I messed up. I shouldn't have done that. Can you tell us a little bit about like how you came into Bitcoin, what orange pilled you, and how you screwed up?
Yeah, so my background is traditional assets, right? It's like property, stocks, gold, et cetera, et cetera. All the old school trad stuff. And in 2016, 2017 cycle, me and my best friend were sitting in a cigar lounge and we're looking at this Bitcoin thing, thinking it's a scam. And we saw the price running up. So even though we thought it was a scam, we could still see little opportunities. So we both bought 20 Bitcoins each, sitting in the cigar lounge, and
And
thought,
how much was it?
let's.
How
I
much
can't,
were a big?
it was like shy. It was like shy of $1,000, something like that.
Oof.
And 2 weeks later, we were sitting in the same cigar lounge. The price had doubled. So we thought, this is great. We just paid for cigars for 6 months. Let's sell this. So we sold it,
Mm.
right? And continued thinking it was a scam. Went up to 20K, came crashing back down. And then fast forward, I was walking around the park during the big flu season worldwide flu season that we had, and a friend of mine who I take very seriously had started getting serious about Bitcoin. And if it was anyone else, to me, Bitcoin was full of t-shirt wearing, sandal flip flop wearing guys that no one in serious finance took seriously. So none of this could make sense. And then this guy said, "You need to." I started ridiculing him for getting into Bitcoin, and he said, "You need to read this book, and then we can have a conversation about it." And the book was The Bitcoin Standard by Saifedean Ammous. And Saifedean, I connected with him because he was a gold guy, and I was a gold guy at the time. And so I was walking around the park in London listening to this book, and there was this one moment where he just mentions the idea of stock to flow. Now, we can get into what stock to flow is, but it was this moment of my history up till that point, understanding gold and understanding that stock to flow is important for a hard asset, that suddenly just flipped the switch for me. And instantly I realized I'd fucked up. I didn't even have to listen to the whole thing. Just the word stock to flow made me realize that I was looking at Bitcoin completely wrong. And between then panicking and walking home, I'd already reloaded my Coinbase app on the phone, wired money, and bought Bitcoin.
So why now do you think? I feel like even as more and more people understand the validity of Bitcoin and understand the blockchain and that things are inevitably moving towards a digital currency, it seems like as that inevitable marching continues, it is almost has people more polarized to the idea of Bitcoin. And it's funny because as Smitty and I were sitting down prior to recording, we pulled up a website. Sometimes I like to just search what people are spinning up about things. Like I search why is Bitcoin bad, which is kind of funny because it's exactly what you'd expect. Like you could do the same thing, I'm sure, in every industry. We see so many things like that in the fitness industry. And there's like these gatekeepers who just want to somehow hold the power of telling you that this is not what you should do. And the Motley Fool of all places. I mean, I've heard of it. I don't spend a lot of time on that website, but the Motley Fool has an article, 10 reasons why Bitcoin is a terrible investment. And all I mean, we couldn't even get halfway through it before we were like, this is just a waste of time. But all of the reasons seem to be the exact reasons why it's being adopted. And I don't understand what the motive is for people to be so down on it when either they don't understand it or they do understand it, and there's something else that I can't wrap my head around. Can you speak to maybe why you think it's so polarizing?
Yeah, Obi, listen, imagine that there was 3,000 people in the world that had 90% of all of the resources, and all of their fiat dollars were sitting in assets that weren't keeping up with the amount of debasement that's going on. So they're actually losing their ice cube. If you look at that, each person's wealth as their ice cube that they're holding in their hand. It's melting, right? So somebody who's got $1 billion, they've got a bigger problem than somebody who's got $10,000, right? It's melting. There's more water. If I was someone who had $1 billion and I realized that I had fucked up, the one thing I would do is utilize my resources to make everyone else believe that this was a bad thing in order for me to accumulate. It's game theory. That's all it is.
So you think that there's some hedonism behind it and that people are snatching this up for themselves behind the scenes?
Look at what happened, right? Larry Fink from BlackRock was all over TV saying, Bitcoin's terrible, Bitcoin's terrible, Bitcoin's terrible. In the meantime, his own company, his own hedge fund, his own asset management firm had people doing research as to what the perfect allocation of Bitcoin in a portfolio should be, which got leaked a few weeks ago. What also happened was that the second Larry Fink, who was at the helm of this ESG movement, well, it's the second that they applied for a Bitcoin ETF finally, and he changed his tune on it, the first thing I said was Bitcoin's about to become ESG friendly. And what happened? Less than 2 weeks later, KPMG released a report saying Bitcoin can help the environment.
Yeah.
You think that information was just showed up in 2 weeks suddenly?
Yeah.
Well, it's funny. The first thing on the Motley Fool's list of why not to buy Bitcoin is, it uses too much energy, right? And whoever has the money or whoever has the wealth can control the narrative, can control the media, and that's kind of what Larry Fink was doing. But I did want to take a step back before we get too deep into it, because I wanted to talk to you about the stock to flow and scarcity, because you have a ton of videos on it, and I love how you explain it. But if let's say you and I, or let's say Obi, because I'm right in line with what you're thinking, but let's say you and Obi are riding the elevator and you have that elevator pitch. You got 2 minutes to tell Obi like what Bitcoin is and why you need it. What would you tell him? So I know that's a big question, but
yeah, I'll take a stab at it. So human beings have naturally moved towards the scarcest thing. Real estate is a $330 trillion market, right? The stock market is about $140 trillion market. The gold market is about $13 trillion. And conveniently, they all rank in market cap appropriately to their scarcity. Real estate is the hardest thing to rebuild. If you click your fingers and all the real estate disappears, it's going to take you 120 years to rebuild that. You click your fingers and all the companies disappear, it's going to take you about 60 years to rebuild them. You click your fingers and all the gold disappears, it's going to take you about 55 years to remine all that gold. So scarcity is the main driving factor of where wealth goes. And Bitcoin is the single scarcest asset humanity has ever created, because there is only 21 million and there will only be 21 million.
I'm just trying to get to my floor. So is there a problem? Can scarcity go too far? I feel like with all these companies buying up Bitcoin and hoarding it for themselves, is that blocking out the average investor?
Yes.
And so is that a problem in terms of, I guess that would drive the price up.
Called capitalism.
Right.
It's called capitalism. The person who acquires the resource then can dictate what happens to his resource. You have to then pay him enough to give some of that resource. That's capitalism. That's what it should be.
Yep.
So the good thing about Bitcoin is that the corporates and the hedge funds and the this, that, and the other got into it late. There's only about 2 million, less than 2 million Bitcoin, I think 1.5 in fact, that is left to be mined. So the rest of the Bitcoin is being held by people all around the world in a decentralized fashion. And there's only 21 million of these things. So that's actually a part of the point of it.
Right.
Well, it's funny. One of British HODL's ethos is, if you will, is get to one Bitcoin, get to one Bitcoin. Like there's urgency in his videos, and that's, sort of the narrative of your last, I don't know, 20, 30 videos of start accumulating as much as you can. And, depending on, your means will kind of drive, how much you're able to accumulate. But you do have this idea of, Bitcoin prices out certain wealth classes. Can you talk about that?
Yeah, at the end of the day, we are all right now in the race against scarcity.
Mm.
And the most scarce thing, by the way, this is not uncommon for the human spirit. The most scarce thing is your life. You have one of it. You're in a race against it. Why'd you guys work out?
Extend your
We're
life.
in a, we're in a race against the scarcity of life. And so with Bitcoin, we are in the race against scarcity. Finally, we have never experienced anything else besides your own life that is truly scarce on this planet.
Mm.
Real estate's not scarce. I can build more. Gold's not scarce. I can mine more. There is illegal mining of gold going on right now that we don't even know how many more grams are being added, how many more ounces are being added. So as that race of scarcity happens, we start pricing out people. We've priced out the middle class. We've priced out, in terms of getting to one Bitcoin, we've priced out all of the poor people in the world. We've now priced out the middle class in the Western worlds, because it's hard to get 27 grand together if you just figured out Bitcoin today, if you're in the middle class. The next stage will be to price out low single digit millionaires, because if you're worth $2 or $3 million, you've probably got that tied up in real estate. So what are you going to do? Sell 2 bedrooms of a property to get into that? It's hard. Next stage will be pricing out double digit millionaires. And it just continues like that, because the race is actually against scarcity. I can't just issue a law. I can't just, print some money and increase and mess with the demand and supply levers of an asset. At the end of the day, every asset has a demand lever and a supply lever. Bitcoin's the first time in human history where the supply lever cannot be manipulated, no matter what happens. That's why Bitcoin is very important right now. Even if you think Bitcoin is completely irrelevant, getting to one to create some diversity in your wealth, in what you're doing, is important, because simply for the fact that it's the only asset that cannot be manipulated in its supply. Just that one understanding should be enough for the person who's got maybe a few $100,000 in net worth to just take a punt on one of them. Let's say I'm completely wrong. You've been buying, per se, you've been buying property, you've been building a business, you've been delving into all these things that are completely manipulatable. Why not own one of something that is completely unmanipulatable?
So in the Bitcoin standard, they talked about the stock to flow ratio. And let's say we understand that you cannot influence the stock to flow ratio with Bitcoin. Is there a concern that someone along the line can introduce another currency similar to Bitcoin? And I guess currency would be the wrong word, but store of value on some other blockchain that could compete with this, that would increase? Like, is there another door that could be opened down the road that would somehow influence someone to move to that rather than Bitcoin? Or is Bitcoin always going to be a mainstay?
There's always that risk. I'm a risk analyst. Like that's what I do. I analyze risk. So yes, there's always a risk. But as more governments come in that understand it, the third most powerful person in the United States now, which is the Speaker of the House, interim Speaker of the House, is a pro-Bitcoin advocate. Mm-hmm. So as more governors, as more lawmakers come into this, the risk goes down. As more financial institutions come into this, the risk goes down. As more people with voting power come into this, the risk goes down. Think about it. This is the first time in human history you have an asset worth roughly $500 billion in a $900 trillion market, influencing what goes on in politics. Every politician that wants to be relevant is talking about Bitcoin. Why is that? Left and right. Why is that?
Yeah, that kind of brings up another question, not to detract from where you're going with that, but I hear a lot about concerns with lack of regulation with the government, but I also hear the benefits of it being decentralized. First off, my question is, if this is a global store of value and a measurement of value and store of value, I guess is the right way to put it, how's the U.S. government going to affect the way we use it here? And, is there concern with more regulation, or do we want more regulation? I'm kind of
The US,
confused on that.
yeah. So the reason why you're confused is because we're going through a little bit of a change of guard in Bitcoin. The last buyer of Bitcoin was the anarchist, right? The new buyer of Bitcoin is the billionaire, right? The billionaire is bought into the system. The anarchist wants to take down the system. We're going through this transition in the buyer. I talk about this, like the new buyer of Bitcoin is completely different to the old buyer of Bitcoin, which is why we're having this confusion around, do we want regulation? Do we not want regulation? At the end of the day, the United States capital markets are the best in the world, and they're the best in the world for a reason. That reason is they will let anything flourish as long as it is controllable and influenceable within the United States. The United States has no desire to own the asset as long as it can control the asset. And that's what's happening with Bitcoin. It is completely transparently taxable. We know exactly what it is, where it is, et cetera, et cetera. It's completely taxable. We know now, in fact, the one thing that we need to do is create tax incentives for people to buy it. Like you have a 1031 exchange on property, you need a 1031 exchange on Bitcoin. So it's not that we want more government regulation. It's that is the natural course of all assets in the U.S. capital markets.
Yeah, Greg Foss talks about the improving the regulation around Bitcoin will drive Bitcoin adoption and have
Absolutely.
these big guys like BlackRock come in. It's funny. I wanted to make a mention of how BlackRock's coming in, and they had that inside memo leaked, and they talked about how normal 401k is like a 60-40 split. And in that internal document, they talked about how they think the best allocation of Bitcoin in your in your wealth, your portfolio is like 84%, and then the remaining 16% would be 60-40. So they understand the value of Bitcoin and the scarcity of it, but also how it's not manipulated, where as demand goes up, we increase the supply, which is the normal kind of thing that we typically do with these global assets that people hold on to. But I did want to just piggyback on what Obi said about
can I just make
Sure.
one point? So this is a point to OB. Like, do you guys share which state you're in?
Yeah,
New York.
New York, right? So I don't know. Let's say there's 500,000 gym goers in New York right now. OB, what would happen to the amount of gyms in the city if there were suddenly 3 million gym goers in New York? What would happen?
Right.
There'd be more gyms, right?
Right.
People would figure out, like, I better sell some whatever I can sell to start a gym, because suddenly we've had, a 6x increase in the gym. So guess what? Can't do that with Bitcoin. As many gym goers can come in. What would happen to the price of that gym membership if suddenly the gym goers went from 500,000 to 3 million and you couldn't open a new gym?
That's a great analogy. Yeah. So basically, I guess my question then would be, if everyone is holding Bitcoin eventually and it becomes something that they can't buy, right? Is that eventually the problem that we're going to run into? Like you said, we're already kind of pricing out lower income buyers, which just drives the price of it up. I guess my question is, where does it fall into the investing strategies of future generations? Is it just that Bitcoin is going to be divisible by more Satoshis, or like what does that look like? Because
there's a price for everything, right? There's a price for everything. So just because I'm not selling right now doesn't mean I might not sell a little bit at $10 million a coin, right? There's always a price for something. It just, when does the price get high enough to make me sell?
Okay. So, okay, that makes sense.
And the other key point, you're actually jumping all over my questions at the end. No, it's good. But you came out with a video I don't know, maybe a month or so ago about how you won't have to sell any of your Bitcoin. You can just leverage your Bitcoin or take out a loan against your Bitcoin. And that's really where the smart investor would look to leverage the Bitcoin as opposed to triggering some capital gains tax event, right? So can you just real quick talk about why I would never have, once I acquire Bitcoin, why I would never have to sell it?
Yeah, one of the things that people misconstrue, they think that somebody who's worth $100 million plus is selling assets because they need to live. They're not. They're selling assets because they want to dispose of those assets. You only Most of the time, if I want to generate liquidity on, let's say, $100 million worth of the S&P 500 holding that I've got, right? I go to my bank and I say I want a loan against it, and they say, okay. That's how it works. We'll take what you want. How much liquidity you want? You want $5 million of liquidity? Cool. We'll put up, $25 million of collateral, and we'll lend you $5 million of liquidity, and everything's fine. I still own that stock, so I've taken $5 million of debt, and over the next, let's say 5-6 years, I just refi that debt. Same thing as what normal people do with houses, except wealthy people do that with equities. It's just the exact same thing. You actually get better rates with equities because there's less risk. So that's the advantage of Bitcoin, because Bitcoin is the same whether I'm in New York, London, or Singapore. So what that means is now finance goes international, because there might be, say if I've got $100 million worth of property in New York, up until now, I could go to maybe JP Morgan and a couple other banks, and they'll be able to have the teams on the ground in order to assess the risk that they have lending me on that property. Whereas with Bitcoin, as long as it's on the blockchain, as long as it's verifiable on the blockchain, if I go to a bank in New York and they say we'll charge you 5.5% for your liquidity on that Bitcoin, I call a bank in London and they say we'll give you 4% because we want the business. I now call a bank in Singapore and they say we'll give you 3.8%. Now I call my guys in New York again and say, these are the offers I've got, because it doesn't matter. They don't need a team on the ground. They don't need resources. They don't need anything. Finance is now democratized, which is why Bitcoin becomes the favorite asset of banks. They don't need the teams. They don't need the employees. They don't need the cost. They don't need anything to lend against it. Bitcoin becomes, as has been said multiple times, pristine collateral, because there's no risk to it. Who's gonna squat on Bitcoin? No one.
Yeah.
Which is a normal risk analysis that you do when you're trying to lend out against commercial property. What's going to happen to this? Can I trust the person to actually build this commercial property project the way that they're saying they're going to do it? I don't need to worry about that with Bitcoin. Can I trust this person to invest in companies if they want liquidity against their portfolio? Can I trust them to hold that and manage that risk properly? I don't need to worry about that with Bitcoin. It becomes the favorite capital of institutions, which is why they're getting into it now.
Well, that's a fantastic answer. I was thinking, I want to go back to what Obi was talking about with regulation, where do you think that because of the stringent regulation that the SEC has been trying to do to Bitcoin and preventing the spot Bitcoin ETFs and all this uncertainty around how to register a spot Bitcoin ETF recently, up until the recent filings, do you think that's driven the innovation for the blockchain and driven the acceptance of Bitcoin outside of the US? I was thinking in terms of, the US has the global currency, right? So we all use the USD, we trade oil, Russia uses it, China uses it, and now they're moving into BRICS and all these different things. But do you think like the SEC has prevented the US from being sort of like at the forefront of Bitcoin adoption and innovation, especially the layer 2 protocols and all those different things?
I can see why people would say that, but I'm more coming from a traditional background, and in traditional assets, things move very slowly. So in the grand scheme of things, this is like business as normal, right? It's the same thing that happened when the GLD ETF wanted to get approved. We had to go kick the shit out of the SEC in order to get that to happen. This is just business as usual, and I prefer it like this. I prefer it like this because every single concern is being handled before the ETF comes out. That's very important for investors. At the end of the day, like I said, we're looking at, people have the tendency to talk about assets like speculations. Bitcoin's a savings technology. Now, in order for me to feel safe for my parents or other people's parents and uncles and aunties to get involved with Bitcoin, I have to wait until the wall of worry has been completely climbed. Tell me, after this ETF gets approved, what other corporate wall of worry is there? It's environmentally good. It's sound from a taxation perspective. The government has regulated it. The institutions are behind it. What else is there?
What else is there? That was
What
actually
else?
one of my questions. Is it feels like it's kind of achieved escape velocity at this point, but are there any foreseeable obstacles that it still needs to overcome?
The way I would look at it is the only obstacle left at this point is the fear around holding it. And that gets overcome as soon as an ETF is approved.
Because you won't have to physically custody the Bitcoin. BlackRock will do it for you, and then you can have a piece of that. All the ETF. Well, they have to physically own the Bitcoin behind the ETF, right?
That's the law, yeah. And
right.
so, and everyone says, oh, they'll do this and they'll do that. If that was the case, there is trillions of dollars of other assets under management in the United States in these ETF wrappers that would have been blown apart by now. And they're
so
not.
Can you explain that to the uninitiated of like the offering exposure to Bitcoin through the ETF thing?
Yeah, like for example, imagine I have a company and you are going to invest $10,000 into that company. The only function of that company is to hold San Pellegrino water. So you know that you are going to give me 10 grand and I'm going to buy a bunch of cases of San Pellegrino water and they're going to sit in a warehouse and I'm going to make sure for you that San Pellegrino water stays safe. You're going to pay me a 1% fee to do that because you're a fan of San Pellegrino water. And so now the valuation of my company, which does no other business besides holding San Pellegrino water, is the value of the San Pellegrino water. That's it.
So why not cut out the middleman? What is the benefit of you holding the Pellegrino versus me?
Because it creates ease. And unfortunately, and Bitcoiners don't like this, and I don't like this, but unfortunately, people are not good at taking responsibility for their assets. No asset right now, no major asset is bearer held. What I mean by that is, like, do I bear the asset? Property is not, stocks are not, nothing. None of these, no big assets are bearer instruments. So what this does is it allows someone who's looking at a broker account to look at their annual performance at Tesla, click sell, and look at the annual performance of Bitcoin and click buy. And they don't need to worry about where is it being held. They don't need to worry about the wallet. They don't need to worry about, is this wallet safe? They don't need to worry about software updates on the wallet. They don't need to worry about anything. And the US is the best capital market. People ask me, oh, but we have ETFs in Canada. We have ETFs in all these other countries. Why hasn't it happened? Well, because the US capital markets are the biggest, most powerful in the world. I think it's like 40x the UK. So think about all these other little countries. No one cares. So the US capital markets have the best structure for these assets, have the best asset protection laws, and that's why we're waiting on the US.
So I did want to put you on the spot, and I know that whenever I watch Bitcoin guys talk about the future price prediction, they always say one thing: well, I can give you a price or I can give you a timeline, but I can't give you both. But I just wanted to kind of bring in some of the things that you've talked about in your recent videos, where you said, like, when the ETF for gold was approved, the market shot up like 380%. But then you also did a video where you said, where all these spot Bitcoin ETFs are coming in, $17.7 trillion is coming into Bitcoin. So, like, all this money is coming into Bitcoin, and there is a multiplier, right? You talked about a multiplier where it's not only the market cap, where the price is set at the margin of the supply, right? So, Bitcoin has 21 million as a supply, but that's kind of false, right? There's 4 to 5 million that have been lost. MicroStrategy owns 150,000 BlackRock is secretly accumulating. There's all these whales that have, these secret wallets. And, really the amount of Bitcoin on the exchanges is like 1.8 million. And you said there's 1.5 left to mine. So the scarcity of Bitcoin is way beyond 21 million. So we have tons of money coming into Bitcoin, and it's even scarcer than you can even imagine. Like, what do you think is the future 5 to 10 years out for someone that believes in Bitcoin, believes that Bitcoin is hope, believes that Bitcoin can be this store of wealth for you and your family and your future children? Like, what do you believe is the trajectory of Bitcoin?
I think it goes to $100 trillion market cap, which translates to a $5 million Bitcoin by 2038.
Yeah.
So at some point in that region. And the reason why I think it is this, I never discuss my multiplier effect, right? I discuss Bank of America's multiplier effect. Bank of America did a study. So again, everyone says, oh, these institutions don't know what it is. How arrogant do people have to be to think that the biggest asset managers on earth don't have a team to look at a new opportunity? How arrogant is that? Right? It's arrogance. It's BlackRock knows more about Bitcoin than the average Bitcoiner on Twitter. Mm-hmm. Why? Because they've got 100 nerds looking at it all day.
Yeah.
Because they can afford that. So Bank of America put out this little referenced study in the peak of the last bull run in 2021. And what they said is that they believe that $93 million of fresh cash going into Bitcoin had the ability to increase the market cap by $11 billion, which is 1% of the then peak market cap of $1.1 trillion. That is higher than any asset that we've ever seen before because of the supply constraint, right? As more and more money rushes into it, less and less Bitcoin is available. Whereas if we're in traditional markets, more and more money comes into it, I can create more stock, right? I can build more property, I can mine more gold. So they predicted $93 million going in would increase the market cap by $11 billion. They don't predict it. They literally analyzed the market and said, this is what it is. And so what that means is for every dollar that went into it, about $100 of market cap was added to the price of Bitcoin overall. So when I say it can go to $100 trillion market cap, the thing that I'm basing that on is in the next 10 to 12 years, $1 trillion will go into Bitcoin. That's it. 1 trillion. Real estate's worth 330 trillion. The US stock market is worth 140 trillion. The US bond market is worth roughly 120 trillion. So I don't think 1 trillion of fresh cash going into Bitcoin is crazy.
No,
super conservative.
Wow.
So what do you think if we were going to, let's do another elevator pitch experiment. If someone, we talked about what Bitcoin is, why you need it, but how can you explain like your best pitch for getting off zero? Not necessarily getting to one Bitcoin, because again, you've talked about getting priced out, but what most people don't realize is a Bitcoin is basically 100 million Satoshis, right? So it's divisible by 8 decimal places. Many people don't realize that. When I say, you should buy $20 a week, they're like, well, it's 27,000. How can I do that? Well, it's divisible, right? It's just like a dollar has 100 cents. Well, a Bitcoin has 100 million Satoshis. And, what's your best, if you're talking to our audience, which you are, what would you tell them is the urgency? You talk about finality of scarcity. There's no other asset that has that scarcity, because like you said, we can mine more gold, we can create more houses, all these different things that people use to store value into the future. What would you tell them about Bitcoin and why it's so urgent right now?
If we can get to the point of understanding that there are only 21 million Bitcoin, well, then you also need to understand that 1 billionaire Michael Saylor, coming into the space and it ticking for him caused him to buy $500 million in the first go around. And then he leveraged his company to buy $4 billion of it in the preceding go arounds. And that's one billionaire. And we have almost 60 million millionaires, US dollar millionaires in the world. And we have roughly 4,000 billionaires in the world. And they're all starting to get it. So if the millionaires and the billionaires are starting to get it, and there's 60 plus million of them, and there's still only 21 million Bitcoin, isn't it worth having a little bit just in case? What if they're right? Let's just imagine I'm wrong, everyone's wrong. What if they're right? What if the billionaires are right? Let's get a little bit.
That's a good pitch.
I want to go buy some right now.
Yeah. Sorry, go ahead.
No, go ahead. Did you have any?
No, I guess, this feels like a little bit of a regression in the conversation, but something that comes up a lot of times when I'm talking about it, and you guys are more educated on this than I am. What is something that you would say to someone that is still concerned about losing their Bitcoin? I know Smitty's been urging me to get a cold storage wallet. And, I know that there's still fear that because it's a digital asset, that it could be corrupted somehow. And, what would you say to someone that's maybe has a little fear about not holding something tangible? I like what you said before, like no one's holding gold, no one's holding the actual physical asset. So it's not as much of a leap in my mind that, there could be something of value that I don't physically hold. But I guess I don't know. I guess the fact that maybe it could be corrupted somehow still has people a little worried about that. So is there something you could speak to on that?
Grow up. That's my advice. Grow up. Because everything that you've ever done in your life that was worth doing was hard at the beginning. Whether it was going to the gym, building a business, starting a family, investing in something, it was all hard. What if you we get a lot of people that are interested in real estate, right? What if you signed up for the wrong mortgage at the beginning? You'd have been screwed. What if you went to the gym, put too much weight on the deadlift bar, and tried to do your first deadlift and screwed your back up forever? Still took the risk. Why? Because the reward was worth it. So anyone who tells me that just doesn't understand what the potential reward is, because we're incentive-driven creatures. Once we understand the reward, we'll take the risk. But most people don't understand the reward, which is why I started my YouTube channel, because there's amazing Bitcoin podcasters talking about the technology and everything else in Bitcoin. There's way better than me. But most people don't understand the reward. How I got my parents to see it was understanding that if they bought Bitcoin at $10,000 and they bought one Bitcoin for every property that they own, when Bitcoin hit 100,000, their 35 years of work in that property portfolio would be liquid, transferable anywhere in the world instantly. So grow up. It's hard. It's scary. Yeah. I get it. Grow up.
Yeah. And I think that's sort of the counterpart to everyone waiting to get into Bitcoin through all these wealth managers, right? All that, the BlackRocks, Fidelities, Charles Schwab. Once they get into Bitcoin, they feel comfortable putting money into it, but they won't take a step back and actually use Bitcoin as a bearer asset. They won't, take self-custody because of, they have fear, or they, think I'm going to lose it or whatever. But
what it is they don't want to take ownership over their own understanding. That's what it is.
They want to put it on.
They want to put the ownership of their understanding onto Larry Fink, because we've been trained not to trust ourselves. We've been trained not to believe in ourselves. And most people have not had the moments of I'm right in their life to be able to go, screw everything else. I'm right. I know I'm right. I'm going to do this. they want Larry Fink to tell them to do it. They want all these people to tell them to do it, and then they'll do it. They don't want any ownership over the understanding. They just want the result. And in which case, if that's all you want, you're just going to get a lower result, because one day you'll get into Bitcoin. It might not be now. It might be when Bitcoin hits $1 million a coin.
Well, Michael Saylor has that famous quote. He's like, you get Bitcoin at the price you deserve. Right. And, when he was looking into it early on, I can't remember the year, but maybe like 2015, it was 10,000 a coin. Right. But he didn't get into it until right before, the flu season, if you will, and when he bought into it, it was, $25,000, but he could have been dumping all of his, MicroStrategy profits into it at 10,000. So
same as me. I had the chance to buy it sub $1,000. I missed a 10x in my net worth, or 5x, something like that. I bought it in at $5,000 to $6,000.
Yeah, I mean, it's there's a lot of parallels, it seems like, to the Bitcoin world and fitness, because
absolutely,
it's like you said, we're taught to not trust ourselves, and a lot of our job as a coach, as a gym owner, is just talking people off the ledge, and kind of like you're saying, like, grow up, take personal responsibility, take an active interest in your own finances, your own health, your own nutrition, and really the answers are right in front of your face. It's like people just don't want to pay attention to it. They want someone else. They want to outsource their hesitancy to someone that's more confident for them to tell them exactly what they need to do. So you talking about Bitcoin feels like I'm talking to another coach in the industry.
Yeah, but this happened to me, right? So when I was in London in 2020, end of 2020, basically, I was still training because I had access to people with a brain. And so, I was working up my seated squat up to 100 kilos, which is 220 pounds.
Yep.
Right. And it was like, we got to 95, all good. And suddenly the extra 2.5 kilos of plates goes on either side, and my brain just couldn't handle it. It was like this mental barrier that I had. It took my personal trainer to look at me and goes, "You've already done it. Shut the fuck up. Get underneath there and lift that shit." That's all it took.
Yeah.
And I cracked the barrier. So my body already had the capability to do it, which is exactly the same thing with Bitcoin and everything else in the world. My body knew what to do. I didn't have confidence in my body to do it. I had to put my ownership of that ability onto him. And sometimes you need that. But with Bitcoin, and when it comes to money and your own success, you are ultimately responsible. So in that moment, I had to grow up, and he had to tell me to grow up. And I'm the one telling people to grow up when it comes to Bitcoin. That's how it works. It's all a community.
I love that.
I think that growing up for a man is so important. And I think one of the videos that you talked about where, your children, like you talked about how, your dad and mom came over, they were able to buy 10 properties, right? And then you could come over and you could buy 10 properties. Your kids will never be able to buy 10 Bitcoin, right? And I think it's your responsibility as a man in setting up the future for your children, for your name, and just being able to take that chance right now. Can you talk about that?
Yeah, listen, look, even though I could buy 10 properties right now in London, right? I'm not buying the same properties. I'm not buying them in the same location because the price is out of my budget. Outside of the miraculous, and what I mean by the miraculous is my son or daughter creating a company that's worth multiple billions of dollars and then going and buying, 10 Bitcoin or whatever it is. They will never be able to buy it, ever. Because, I couldn't buy 10 properties when I was, my dad's age equivalent in London. But I could buy it outside of London. I could buy it in a different country. But what would happen if all of the properties ever to be built were built in the land space of Manhattan?
Can't get it. Yeah.
You can't get it. You just cannot get it. So that's why I say we're in a race against scarcity, And in a race against scarcity, scarcity always wins.
Yeah,
Scarcity
and I
always
really
wins.
like the message. Right before we hit record, you were saying, let's help these people. And I love that the Bitcoin space right now, at least amongst people like yourself, British, is like very altruistic, and there's an urging to go out and capture this because there's a race against this scarcity. And I feel like it's, again, not to keep bringing it back to fitness, but it's like a lot of times people will eschew the idea that this is sound advice because it's like, well, of course you're going to say that. You're like, when we give advice for fitness, it's coming from a place of we know what fitness can offer you, and we've seen it with our own eyes. We really believe this, and we want to help people. And I think a lot of times people will diminish that message because it's like, well, yeah, you're a fitness guy, you own a gym, obviously, but it's not by chance that we're in this industry in a place that we can offer that advice. And that's what I like about, I don't know, like finance to me has always been kind of gate kept by these financial advisors because, in a way that almost feels like they're not as altruistic as people that are talking about Bitcoin, and I think with that being said, I think we're kind of getting to the maybe some words of wisdom for our listeners. I think you've done an awesome job. I love how you speak in analogies. You've really helped my understanding, and I've read the Bitcoin standard, and still just talking to a human like yourself has really opened up my perspective on things. But are there any words of wisdom or anything that you want to leave the listener with, about maybe where to start looking? You can throw out your YouTube page, obviously, for resources, but can you point someone like, it sounds like you've orange pilled your own parents. Like, let's say my parents are listening, what would you tell someone that is maybe just now opening their eyes to it?
I always recommend people the Bitcoin Standard as the first place to start because that's what got me. So I feel it as a debt to always recommend that book. Secondly, I mean, if you want, Bitcoin's the first asset where all information is transparent and it's incentivized to be transparent. When I was in real estate, right, and there was a building that came up, we couldn't tell any one of my friends about it because they're all sharks. We're all sharks in the space. We want the same deal, and there's a scarcity on the deal. So if I told anyone else about it, they would go and structure it better, or there was a chance that they would go and structure it better. It's the same thing as, for example, let's say you find a gym location where there's a population of 40,000 people that don't have a gym within walking distance, right? You're not going to go and tell a bunch of other potential gym owners about it until you secure that property. Whereas with Bitcoin, I can tell everyone about Bitcoin. The only lack of transparent thing in Bitcoin is the price at which I got in at. You can own the same asset, a multi-billionaire can own the same asset, and a person on the street can own the same asset at roughly the same price. That's the first time ever in human history. So Bitcoin is this, it allows space for altruism, selflessness. It allows space for that. It's the first asset to ever allow space for that. But the words of advice is very simple. YouTube has everything that you need to know on Bitcoin. The books out there, fantastic podcasters. Just go dive in. Just go dive into it. My channel, I think there is a lot of information out there on Bitcoin, and I think it's the first time of any. I wish I had this. Do you know how many hands I had to shake, how many rooms I had to pay to get into, how much bullshit I had to do in order to get access to the right people, the right information in order to get started? When I got started, it was insane. I wish I had the community around Bitcoin that there is, just to learn, even if I do nothing with it. Think about this. You got an asset that's actual got finality or scarcity, and you don't even want to learn about it. You don't even want. BlackRock's getting into it. The number one asset manager in the world is getting into it, and you don't even want to learn about it. That's arrogant. I don't care whether you buy it or not. You owe it to yourself, and you owe it to your children, and you owe it to their children to at least learn about it. And then you can make a decision. Just get started.
I love that message. Perfectly in tune with like all the, the things that we try to bring up on this podcast. You wouldn't just expect that you can outsource your own health to someone else. I mean, people do it, but we're all about personal responsibility here. And it just so happens that finance is kind of the last piece of puzzle for us on this podcast.
Absolutely.
We've covered a lot of different topics, but we really appreciate your perspective on that.
Absolutely.
Yeah.
And I want to thank you too for helping me in my journey. But like I said, I've watched all your videos, and the best thing that I could say is that you're just honest. You're open. You're honest. You know, when you're talking about your parents, and you know, you have this kind heart, even though you're a little brash in the outside, right? And but I appreciate that, because everyone's so polished. You know what I mean? I want somebody that's real. Like when I listen to your videos, it's sort of like two boys talking, right? You're talking to me, I'm talking to you, and that's so I appreciate that. I appreciate all your hard work, and we appreciate you coming on the podcast today.
No, listen, it's my honor, and thanks for having me on. And OB, hopefully you can send me a message once you get some Bitcoin.
Oh, I'm in. I'm all in now. I'm gonna go sell my wife's car right now.
I actually did that. So I sold once I understood it, I was just like, I need to sell some stuff that I don't love. Yeah. So I like watches, right? So I sold down my watch collection. I sold all my Rolexes and kept 4 watches that I love and put that all into Bitcoin. This cycle round, I was traveling a lot. My car was sitting in London doing nothing. So I sold that. So yeah, like at the end of the day, Bitcoin incentivizes you to sell the things that you don't love for a good store of value, so that one day in the future you can actually acquire things you love.
Yeah, wow, I need to hear that, because I'm a big car guy, which is the antithesis of an investment. Just complete. So,
it depends. I had a friend who bought a Lamborghini Urus at the beginning of the flu season, and he flipped it for 50% more than it was during the flu season. So
yeah, the last few years have done a lot of weird things to the car markets, but overall, I think Bitcoin's probably safer to store my money in.
Yeah, absolutely. So British HODL, HODL, which stands for Hold On for Dear Life. But that's your YouTube channel. Do you want to, it's the same for your Twitter, right?
Yeah. So just go to youtube.com and type in British HODL, and you'll find everything you need.
Beautiful. Awesome. We'll post everything in the show notes as well.
Yeah, we'll send you the links and everything.
Thank you so much, British HODL.
Thank you.
Yes, sir.